So if you've ever, dreamt of owning a piece of paradise where the investment returns are as sparkling as the turquoise water, then this deep dive is definitely for you.
It really is.
We are heading straight into the strategic decisions behind property investment in Phuket, Thailand.
It's an island that's, I mean, it's globally famous for its beauty, right? But today, we're diving a bit deeper than that postcard image.
Right.
We want to find out where the real money is made, and I think crucially, how you structure that investment for success.
And our mission here is to really pull out the key intelligence on Phuket's property scene to help you, the listener, move from just being curious to having a real informed strategy. And for this, we're leaning very heavily on the deep, specific expertise of Ocean Worldwide. They're a luxury real estate agency that's been on the ground advising investors in Phuket since 2004.
And that track record is just invaluable. I mean, when we talk about longevity in a market that can be, volatile, we're talking about real local experts.
Yeah.
The director, Sander O'Neill, has spent nearly 2 decades helping literally thousands of investors navigate this very specific environment. So that gives us a highly credible, boots on the ground view of what's happening.
A view of the opportunities and maybe more importantly, the risks.
Exactly.
So before we even look at a map, what's the one metric, the foundational thing every single investor needs to get their head around?
It has to be the rental yield. For any investor, this is basically the report card for your property.
Okay.
It's just the percentage of money you earn from rent each year relative to what the property actually cost you. And in a place like Phuket, with massive tourism, an influx of expats, getting this right can make a huge difference to your bank balance.
It's the difference between a high-performing asset and just a very beautiful, very expensive holiday home.
That's the one.
Okay, let's unpack the fundamentals then. What really drives property income there? We know tourism is huge, but is location still everything?
Location is always, always paramount. But the nuance in Phuket, I think, comes from how the island balances that short-term holiday appeal with the long-term residential side.
Okay, so two different markets almost.
Pretty much. You have the proximity to famous beaches, attractions, of course. But investors have to think, is my property optimized for high volume, quick turnover? Or is it designed for someone to live in comfortably long term?
And I imagine seasonality plays a massive part in that. You see those peak month numbers and get excited.
Oh, yeah. They can inflate expectations like crazy, only for them to get crushed in the quiet low season if you don't have a strategy to bridge that gap.
And that's where the property type comes in, right? Villas versus condos.
That's right. The property choice is a strategy in itself. A villa, a condo, an apartment. Each one supports a different kind of occupancy model and, critically, has totally different management costs.
A condo seems simple enough.
It is. But a luxury villa, that's a complex operation. It can require specialized staff.
So, looking at the market broadly, the agency's data points to 3 main categories of tenants or yield that dictate the strategy. Can you walk us through those?
Certainly. So first, you've got your tourist hotspots. These are the areas chasing the high-rate, short-term holiday makers.
Right. Maximum churn.
Exactly. This model can generate the highest potential gross returns. We're talking between 7 and 10%. But it also demands the most intensive hands-on management.
So high yield but high stress.
You've got it. Then you have the expat havens. This is all about stability.
Okay.
These properties cater to long-term residents. Think families, corporate executives. They provide a much more reliable year-round income, usually in the 5 to 8% range.
And I guess the lower peak yield is balanced out by not having those empty periods.
Precisely. Fewer void periods and much simpler management.
And the third category, the emerging areas.
That's it. These spots are a bit different. They appeal to retirees and that growing digital nomad community. They offer the most affordable entry points, with yields right now around 5 to 7%. But, and this is the key, they carry the greatest potential for capital appreciation as the local infrastructure keeps developing. It's an investment in the future.
Okay, so understand that macro landscape is essential. But property success, it always comes down to the micro, doesn't it? The street level. Let's zoom in on the specific zones, starting with the big one, Patong.
Patong is, without a doubt, the energy capital. It's the epicenter of the nightlife, the main entertainment district, and that relentless stream of visitors makes it the engine for high-yield, short-term rentals.
So that's where you can hit that peak 10% gross return.
You can, but the key isn't just buying in Patong. It's buying right next to the action. What does the data show about proximity?
Yeah, how close do you need to be?
The long-term performance data is crystal clear. Proximity to the beach, to the shopping, and especially to the famous Bangla Road is critical.
So you're trading tranquility for turnover.
Absolutely. Investors there have to accept they're basically operating a high-volume, high-maintenance business. And well-placed condos are the product of choice just because they allow for that quick guest turnaround you need.
That sounds like a lot of work. So if Patowing is high octane, let's move a little bit north to Qaeda Beach. That seems like a totally different world.
It is. Kata has a much calmer, more family-friendly atmosphere. It's really ideal for extended stays.
Like families on holiday for a month or two.
Exactly. Or long-term vacationers escaping a cold winter somewhere else. And this stability, ironically, often translates into higher stable returns, typically in that 7 to 9% range.
The strategy just completely flips. You're not optimizing for a two-night stay, you're optimizing for comfort.
That's it. You're thinking about quality amenities. A decent kitchen, reliable Wi-Fi, enough space to actually feel like a home.
Right, ensuring those longer gaps between tenants just don't happen.
And that predictable, stable cash flow is worth its weight in gold. Even if the peak daily rate isn't as high as Patong, it just reduces the management headache so much.
Continuing north from there, we hit Kamala. This is often described as a step up in refinement, a bit more peaceful.
Kanala definitely attracts a different crowd. High net worth individuals, long-term expats who are really seeking privacy.
And here the focus is almost entirely on quality, I assume.
Totally. You'll find these beautiful, upscale villas, often with private pools, amazing sea views. The yields are strong, typically 6 to 8%, and the value is really locked into that long-term rental market.
So these tenants, they're probably less sensitive to the price, but they're intensely focused on the quality and the exclusivity of the place.
Precisely. They want a superior private living environment away from the tourist crush, and they will pay for it. It's a quality over volume approach that makes Kamala so successful for investors.
Okay, now let's talk about the true premium areas, Bang Tao and Charntalay. These names just scream high-end. What makes this area so sticky for long-term residents?
Bang Tao is exclusivity personified. You've got sophisticated, modern designs attracting the most affluent tenants. Yields here are robust, often hitting that 7 to 10% range.
But the real advantage isn't just the villas, is it? It's the whole lifestyle package.
That's the key. It's the infrastructure. It's what ties these expat families down.
What do you mean by that?
It's the daily routine. The area has unparalleled infrastructure. We're talking proximity to excellent international schools, world-class golf courses, and these essential lifestyle hubs like Boat Avenue and Porto de Phuket.
So it's not just a holiday spot, it's a place to actually live.
Right. This blend of luxury living and daily convenience means that when an expat family settles here, they tend to stay for a long time. And that ensures this consistent, high-value demand for large villas.
That makes perfect sense. The investment isn't just in the property, but in the convenience network around it. Let's pivot south now. Rai and Naihorn. This feels like the complete opposite of Bang Tao.
It really is. It's the definition of Southern charm. It feels more authentic with a distinctly relaxed pace of life. This is your classic emerging area.
And who is it attracting?
Budget-conscious, long-term residents, retirees, and that rapidly growing digital nomad segment.
So for an investor, this means a more affordable entry point with maybe lower immediate yields, around 5 to 7%.
Correct. But there's significant talk about future capital appreciation. The growth potential is huge.
What's driving that expectation?
A major factor is improved accessibility. For instance, the recent expansion of the Cholong bypass has suddenly made this southern area much more accessible for commuters. It's solved a major historical pain point.
I see. So that new convenience boosts future property values.
Exactly. The strategy here is stability. You secure long-term agreements, say 6 months to a year, for guaranteed cash flow while you're betting on that future growth.
Okay, one last area. Let's look away from the beaches entirely and talk about Phuket Town. Why would an investor choose an urban setting?
Phuket Town is the island's cultural and governmental heart. It has this really consistent demand from long-term expats, digital nomads, and local professionals who need to be near the central business district.
It's the total opposite of the holiday market.
It is, and there's a huge, often overlooked operational benefit.
Which is?
Lower management cost and complexity. Urban properties, especially apartments, just require way less upkeep than a sprawling sea-facing villa that's constantly battling humidity and salt air. Hmm. And that simplicity, plus a stable tenant base, translates into excellent net returns. It's a great way to balance riskier beach properties in a portfolio. It's stability over glamour.
We've toured the island, so now comes the really critical stage, turning all this data into a coherent plan.
This is where the serious thinking comes in. It's not just about picking a spot on a map.
It seems like the very first step has to be defining your own objective as an investor, right? Are you chasing that high-rate short-term turnover in a place like Patong?
Or are you prioritizing stable, manageable, year-round income in a place like Kamala or Rawai?
Because those two strategies require completely different risk tolerances and, frankly, different lifestyles.
Absolutely. Then the second critical layer is assessing that growth potential. A smart investor isn't just looking at today's yield.
You have to research what's coming next.
You must. You have to research local development plans. Are there new roads coming? New international schools? These infrastructure improvements are the primary drivers of future property demand and capital appreciation.
And that can make a lower current yield potentially much more valuable in, say, 5 or 10 years.
Exactly right.
And then, of course, the property type has to align with that strategy. We noted condominiums have a lower entry price, they're easier to manage, great for short-term lets.
Right. They typically yield about 5 to 8%, whereas villas, on the other hand, they command higher rates. They appeal to families, larger groups.
And they're fantastic for the long-term expat stays and luxury holidays, offering those potential peak yields of 6 to 10%.
But, and this is a big but, remember that higher gross yield comes with significantly higher management overhead and risk. The choice has to match your willingness to actually operate a business.
Okay, this brings us to what might be the single most critical legal point for any foreign investor in Thailand, the ownership structure.
It cannot be overstated. This is not a detail. It's the foundation of your entire investment.
So what are the options?
Foreigners can own a condo outright. That's called freehold ownership. You own the unit indefinitely. Simple.
Yep.
However, for houses, villas, and the land they sit on, ownership is typically structured as a long-term lease. It's a leasehold, often granted for 30 years.
And why is that 30-year term so vital to understand?
Because it fundamentally dictates your long-term rights and the eventual resale value of the property. You're not buying the land forever.
So you have to investigate the certainty of getting that contract extended.
Impeccably. An investor buying a luxury villa is essentially purchasing the rights to use that property for a finite period. The due diligence on those lease terms and extension clauses has to be perfect. It's a completely different game than buying a freehold condo.
So if we pull all of this together, what's the final takeaway?
I think it's clear. There is no single best place to invest in Phuket. The ideal location is purely dependent on your objectives.
Your budget, your desired return,
and crucially, your tolerance for intensive hands-on management versus seeking that long-term stable income.
That really puts the ball back in the court of personal strategy. But let me leave you with one final thought. Based on the intelligence from Ocean Worldwide, given the growing scarcity of land, especially in those premium spots like Bang Tao and Cherntale where prices are already high, you have to consider the long-term appreciation potential in the emerging southern zones.
Like Rawai and Nai Harn.
Exactly. So you have to ask yourself, is taking that slightly lower immediate yield worth the bet on future capital growth as that southern infrastructure continues to mature? It's a fascinating trade-off.
It's a question that really defines the long-term game in Phuket.
Indeed. If you are seriously considering property investment in Phuket and you need that kind of expert, nuanced advice, the type of insight only a deeply rooted agency like Ocean Worldwide and Sandra O'Neill's team can provide, visit oceanwwp.com today to connect directly with them.
That's oceanww-e.jgp.com.
Thank you for joining us for the deep dive.